Let's talk about Thursday. This was a much cleaner day compared to the previous days, with a strong directional move to the downside and a high quality setup early in the session. I'll walk you through how the day developed and the trade I took. So this is the 15-minute chart just after the open around 9:30. Price was trading inside the weekly gap, and the key levels I had marked were the London high above and Monday's low below. The overall structure was bearish. The market had already been trending lower, so my main expectation was continuation to the downside, especially if we got setups from premium areas. Now, this is where things got interesting. Price came into the 4 a.m. 15-minute fair value gap and respected it cleanly. This was a key area for me because it aligned with the bearish bias, a retracement into imbalance in a downtrend. At this point, I was specifically looking for short setups from this zone, targeting continuation lower. This is a good example of trading with a higher time frame bias, not just reacting but anticipating where setups are more likely to form. Zooming into the 1-minute chart, a short setup formed around 10:12. I took the entry there with a 40-point stop and targeting the lows below. Initially, the market ranged for about 30 minutes, which is something you often see before a continuation move. But after that consolidation, price started pushing lower aggressively and hit my target around 10:52. This was a 135-point move, roughly a 3.3 RR trade. Looking at the 15-minute chart at 1:30 p.m., you can see how the market continued trending lower after that move. At this point, I was watching for another potential short setup if price retraced into the 12:15 p.m. 15-minute fair value gap. However, price only tapped the edge of the gap and didn't give a proper retracement. My rule is to enter only if price retraces at least halfway into the gap, and that didn't happen here. So even though the market continued lower, I didn't take another trade. This is an important point. Not every move is tradable. If your conditions aren't met, you simply stay out. And finally, looking at the full day, the market continued lower and eventually took Monday's low at the end of the session. So overall, a very clean bearish day, clear higher time frame bias, a clean fair value gap reaction, a strong continuation move, and one high quality setup that played out fully. Thursday was a great example of what it looks like when the market is aligned and why waiting for the right conditions pays off. If you found this helpful, consider subscribing and I'll see you tomorrow.